survives because it is an importer and an exporter. This country is one of the world's most um, um, successful, historically, importers and exporters of goods. England has a habit and has a way of being able to take goods and services from one region of the world, rejigger it, and then move it on to another part of the world. Very entrepreneurial, very hardworking people, um, and they're bankers and they're entrepreneurs. Uh, are really good at doing that. And if your country is very good at import export, then it's generally going to become a very wealthy country. You don't have to have natural resources to be a very successful country in this world. You need to be able to move goods. You need to be able to enhance value on goods. Take Germany, for example. They don't have massive oil fields like we do in Canada and the USA. They don't have gigantic gold mines. They don't have massive copper and nickel reserves in their country. Yet, the finest automobiles on the planet for the average guy, guy and girl, come from Germany. Volkswagens are really well made. Legendary with almost every North American college student from the 50s, the 60s, the 70s, and 80s. Volkswagens were the ones that got us through college. BMW, Mercedes-Benz, Siemens, some of the world's most successful corporations are German, and yet they don't have domestic raw materials like we do. North America and the rest of the planet sends raw materials to Germany. Germany re-engineers it and exports it as finished goods. And Germans have one of the highest standards of living, bar none, on the planet. The UK is just as entrepreneurial, is really smart. The UK also is extremely good at bringing in materials, turning it into something else, and shipping it out. But the problem is right now that overnight, the United Kingdom's currency was under attack. Rightly or wrongly, the currency is falling in value against the American dollar, against the euro, against the Swiss franc. It's falling against all currencies of note, major currencies. I'm not talking about third world stuff. And for almost within an hour, it became so close that the UK currency was about to free fall. It was within an hour of having that happen when the Bank of England stepped in last night to bolster and stabilize the currency of the country. Unprecedented moves that any country ever has to do this. And what they did was, instead of raising their interest rates, instead of the Bank of England coming out saying, we're raising our prime rate, we're raising the Fed funds rate like we do in the United States, and the Bank of Canada rate we have here in Canada, instead of raising the rate that they charge for short term, they bought bonds in the open market, long-term 30-year British notes. They started buying those bonds instead. And what the Bank of England was doing to try to support its own currency was they were selling currencies that they have. The United Kingdom has a lot of US dollars. They have a lot of Canadian dollars. They have a lot of euros. They have francs. They have Chinese yuan. They have all kinds of currencies, lots and lots and lots of it. They started to sell those currencies into the open market, in the currency market. And as that money was rolling in, this is all in nanoseconds through computer trades, okay? The dollars were piling up. They immediately turned around and started spending those proceeds. What they were doing is they were selling currencies to buy pounds, using the pounds to buy long-term government pounds debt, and they dropped the interest rate by 0.5% on long-term government bonds. So a 30-year note, instead of paying 4.5%, pays 4%. Because bond prices went up due to demand from the government of the Bank of England to buy their own bonds. They created a demand for bonds, in effect, making the bond prices go up and having the yields go down. In other words, that's how this works. When your stock goes up, if you own IBM and IBM goes up in value, the yield you're getting on IBM is lower. Now, you may have bought it down here. Someone's buying it up here. The person buying it up here isn't getting the yield you are because you bought down here when it was yielding 5%. They're buying it up here and getting 4.8%. And so all of a sudden, there was a demand for British bonds from the Bank of England, buying them up, dropping the interest rate long-term out. This was creating more pressure on the pound, unfortunately, because investors are saying, you want me to hold pounds? You got to pay me, pal. You got to give me money to hold pounds. I'll buy 2-year treasuries, 5-year treasuries. I'll buy those 10-year treasuries you issue. But I want more interest. Because I don't think your pound is going to hold here. I think your pound is going to keep falling against the American dollar. Unless you give me incentive to hold it, I'm not going to buy it. And this so-called buying of bonds out there, you bought 5 billion worth or 10 billion worth or whatever it was. You have trillions of dollars of debt out there, just like America does and other countries. You have all kinds of debt out there. These little purchases are like a little drop of water in a hot frying pan. Psst, gone. So yeah, the pound moved up a little bit and then began to sink again. And it's been coming out here in the last hour or two that the currency traders, the bankers in the United Kingdom and speculators of the currency and all kinds of holders of the debt were selling into this market. They were happy to sell these bonds for a higher price. But there are more sellers than buyers. There's one buyer, the Bank of England. Who's the seller? Everybody else. And it can't buy all the bonds. It cannot buy all the bonds. And the move they made to do that, they tried to show the market, we're prepared to defend our currency. But the market is going, you're not defending it the way you should be defending it. And there was a moment in time that the UK currency, the pound, was in danger of dropping like 5 cents in 5 minutes. That's a crash. That is a complete panic move by the international monetary world against one of the G8 countries. This is huge. This is so huge that every American investor has to be going, what the hey is going on here? This is scary, because if it's a run on the UK currency, there could be a run on the euro, there could be a run on the Canadian dollar, there could be a run on the American dollar sometime. This isn't just limited to one. This can go elsewhere. When buyers feel they're better off selling than holding, they sell first, ask questions later. And that's what they're doing and we're doing with the pound. And right now it's at 106.76 after being as low as 105 something this morning. I mean, it was ugly this morning. And falling faster. I mean, it was just dropping off a cliff, and it could have hit parity today. It's already catastrophic as it is. The pound, when Jennifer and I returned in July from our holiday in Europe, the pound at that time was about 112, 115. Had dropped from the 130 range before we went on holiday. It went to the 120 range while we were on holiday and was now in the 112 range as we got back. And now it's down to 106.8, having been this morning at 105 something. This is a country that has lost 25% of its value as a nation in 4 months. So if you're an American and you go to Safeway, and last week, your grocery bill was $100, and this week it's $125. And you go to Kroger to see if you get better prices, and it's $125 there. And next week you go to Publix, and it's $127 there. And the next week you go back to Safeway, and it's $129 there. You begin to get the picture that, geez, no matter where I go, no matter where I shop, no matter what I get, it's 25, 30% more than it was last week, or last month, or last quarter. And Brits across the spectrum, whether you're high middle class, if you're the very top 5%, the richest of the rich, you're fine. The rest of you are in trouble, okay? 95% of the country is in trouble. And it's the 50%ers to the 75%ers, the upper middle class, are getting annihilated with catastrophic losses. The low end are completely annihilated. They're not getting off scot-free. If you are a pensioner in the United Kingdom and you get the equivalent of $1,500 a month in pension, You're not getting a raise from the Bank of the United Kingdom government every week or every month. They're going to get around to you once a year. By the time they get around to you, you've lost 30% purchasing power, and you might get 10% more because the government can't afford to give you more. They're broke. If you're a minimum wager, you're not getting double the wage. You're not going to get that. You'll get 10% more money, and you're going to pay 30% more for what you need. You are losing lifestyle. You are losing your standard of living. It is slipping away on every single citizen of the United Kingdom as we speak, and it is catastrophic because it's going to turn the country into a recession and into a depression. And yes, the government did reduce taxes. Just 2 days ago, they announced we're going to reduce income taxes. We're going to reduce taxes to corporations. We're going to issue money to people to help them pay their energy bills because they've gone absolutely sky high. Why? Because energy is priced in American dollars. American dollars is what it costs you to buy oil and gas, and you get paid in pounds. We're going to give you more pounds to help you pay for your utility bill, funded by the government of the United Kingdom by issuing bonds to investors to raise the money to do it. Who's going to buy the British pounds at 4%, let alone 4.5%? If the British pounds are becoming cheaper on yield, who wants to buy them? And why would you buy a British pound with the pound at 106 for 4% when you can buy a 4% bond from the United States government? Which one would you rather gamble on? You're a pension fund. You have 1 million pensioners that need to receive money from you every month, and you have 400,000 people working into the pension. You need to bring money into the pension and have it fund itself. You're getting 4.5% from the United States government or 4% from the British government. I think I know which way I'm going to go, which means there's no buyers for these bonds. These bonds cannot go out the door at 4%. They have to go out the door at 6%. And if the British pounds bonds are going to go out at 5.5%, 6%, 6.5%, 7%, maybe, just maybe the pound will stabilize. But the British government doesn't want that because that would be politically unpopular. They'll get defeated at the polls because the opposition is going to say, well, you want these guys in government? Look what's happened to your standard of living in the last 6 months with these guys in government, irrespective of the fact that they gave you a raise by taxing you less and all of that, irrespective of the fact that the pound is so low that goods out of England are cheaper than they've ever been for 20 years. They don't talk about that. They're going to talk about your standard of living, and people are going to listen. Because when you go to fill up your tank for a gallon, a couple of liters of fuel, you're paying more. When you go to the Costco store in the UK, and they have Costco's in the UK, those prices have surged because what's coming into Costco is coming in from France, it's coming in from Germany, it's coming in from Norway, it's coming in from Sweden. Yeah, there's British goods too, but there's a lot of stuff coming in from everywhere else, and those prices are surging. And these folks are coveting the idea of buying certain goods from Europe and Germany, and Europe and Canada and the United States and South America and Asia. They would love to buy this stuff, but they can't. Their currency is so low that prices are so high, they're going, it's 30% more. I don't have that kind of cash lying around. And oh, by the way, I better just buy bread, butter, milk, eggs, maybe some bacon, maybe some ham, buy some fish, and have the fridge with food at all times because I got to eat. I can't get the new HD television, the 68-inch TV I want. I can't get that right now. I got to buy the basics in life because I might get laid off next week because I'm hearing rumors that the firm I'm working for, which is in the import-export world, we're getting crushed here, and they're laying people off, and I might be one of them. You think I'm going to go out and borrow money on my credit card at 28% to buy a new television? No, not going to happen. As a matter of fact, I might be selling one of the 2 TVs I've got just to have some extra cash lying around. That is called a lower standard of living. That is called panic mode. And that is a declining and depreciating and contracting economy. This spreads. And that's what I'm trying to get at for North American investors and people in North America. This kind of mentality spreads everywhere. And when Europeans see the Brits getting crushed, they pull back. Pure human emotion. We in North America who pay attention to the outside world rather than what's on TikTok or what's just on YouTube or what's just on The View or what's just on America's Got Talent or Monday Night Football. If we pay attention to outside those things, we would then see what the hell is happening out there. And it is coming closer and closer to the G7 countries. The top economic countries of the planet are running into fundamental currency and interest rate and inflation problems. This isn't the Venezuela story anymore. We used to see the stories out of Venezuela, and the inflation rate is 100% a month. Oh, boo, those poor people. They buy a loaf of bread today for 5,000 real, and tomorrow it's 5,500 real. Oh, boo-hoo. We didn't care. We didn't give a crap. We didn't. We went to our grocery store and Wonder Bread is $2.44 a loaf or whatever the price. I don't even know what a price of Wonder Bread is. It's cheap, and milk is cheap, and butter is cheap. Except in the last 6 months, you guys started to notice yourselves, hey, look at the price of bacon. A pound of bacon is what? A gallon of gas is what? I can't believe gas is $6-7 a gallon. What is that all about? $8, $9 for a gallon of gas in California? What? We finally got the dope slap from Will Smith, but this morning there was another one that hit the UK. It was the second dope slap. The first one didn't take. The second one had to happen. And there are bankers in the UK and Europe right now who are crapping their pants right now about what they're witnessing happening in the UK and how the UK is responding to it and how powerless the Bank of England actually is to stop it. And this is concerning to the top echelon of Wall Street. But they don't yet talk about it with you. They're not going to bring it up, I suppose. We're up 136 on the Dow right now. We're up 136 points. We're up 12 on S&P. We're up 6 on NASDAQ. As if there's nothing to worry about. Everything's fine. There's nothing to see here. It's all good. There's a lot to see here. In the U.S. right now, there's a hurricane coming into Florida. That is big news, and that should be covered. No question about it. The talk is that hurricane might cause the possibility of $45 billion of damage. It's not the winds that are going to do it. It's the water. The rising water levels washing onto the shore and flooding out subdivisions, downtown cores, full-blown marinas with everything else. And all of the sewer systems will be completely inundated and will be awash in seawater full of all kinds of sea life. This is going to take months to clean up. Power will be lost all over the place. Water systems destroyed, power, the distribution of fuel is going to be interrupted. This is going to be a nasty, nasty one. And this is going to take months, not days, months to recover from. Most of America doesn't get it. But again, it's not Americans' fault, really. Should you be a hurricane expert if you live in Montana? I mean, really, you're in Montana,